you're probably overpaying for your health insurance, and you're looking at all your costs and budgeting every month, and health insurance is like a mortgage. Okay, first we're going to review a few videos about people and what their health insurance situations are, and in there I'm going to sprinkle in tips for you of how to save money on your health insurance and get better coverage too. I'll teach you how to get better deals all around. Let's go.
Every single month, I pay $1,445 for my health insurance for me and my family, and every single time I do a budget breakdown video, you guys ask about it, so I'm going to go into all of the details into my health insurance policy.
Before she even does that, 1445. Okay, this girl is definitely under the age of 40. Even if she's got a family of like 5 or 6, unless she has excellent insurance, which we're going to find out here in a minute about her benefits, she's overpaying by at least $300 a month. Let's go.
And why it's so expensive. To start out with the details, I live in Columbus, Ohio. I'm 27 years old. My husband is 29, and then we have 2 daughters who are 7 and 5. Our health insurance plan is an Am Better by Buckeye Health plan, and it is the gold option. People ask me, how did I choose this specific insurance plan? For those of you who don't know, I own a business. I am 100% self-employed, so I don't have an employer paying a portion of my insurance. It's all just out of pocket, and I just went, to healthcare.gov and picked out my policy.
Okay. Look, dude, these people are under the age of 30. They're in their 20s. They have a household of 4. Okay, they're paying over $1,400 a month for their insurance. Their Am Better plan, I already know it's going to be an HMO. They have a gold level plan, great, probably a $1,500 deductible, somewhere around a $6,000-7,000 out of pocket max. They got a public plan and they're not getting a subsidy. They make too much money. And they don't know how to reduce their rates. I'll tell you about how to reduce your rates if you make too much money, but let's hear what else she has to say.
The reason I chose this specific policy was it was the best option that still included my neurosurgeons, my neurologists, all of my doctors that I currently see and have care with, and continuity of care is the most important thing for me. So let's get into the actual numbers, because paying my monthly premium of $1,445 is not where the costs stop, because I also have a $750 individual deductible, meaning I will pay $750 of covered services, and then my insurance will kick in. So my insurance will pay nothing until I pay $750 out of pocket, and that is per person. After that $750, then insurance will start to kick in. However, I have a $7,500 out of pocket maximum per individual, meaning I will pay a portion of all covered services from my insurance plan until I pay $7,500 in a singular year, and then my insurance will pay 100%. So for example, I get MRIs of my brain and my spine, and let's say the MRI is $2,500. In that case, I might pay $500 of it and my insurance will pay $2,000 of it, but that $500 is going towards that $7,500 out of pocket individual max.
Okay, so she's kind of telling you about deductibles and max out of pockets and all of that. $500 for an MRI might sound like a good deal. You can get plans that'll give it to you for $250 and she'll spend less than that. All right, so for somebody like her, okay, she makes too much money. They're somewhat healthy. I don't know how healthy they are, but why don't, people don't know about private market plans. You got to work with a consultant or a broker to get those plans. But anyway, private market plans don't factor your income for their rates. They only care about how healthy you are. So if you are pretty healthy, meaning you don't need a surgery or you don't have Crohn's disease or certain kinds of diabetes, or, any scheduled surgeries, I honestly, I can get this lady a plan, that a PPO with United or Blue Cross, low deductible, low max out of pocket, household of 4. I'm guessing maybe $900 a month. This is the kind of person that needs to talk to a consultant. I'm a consultant. You can talk to me. There's also a website, healthnerd.net. Okay, they'll educate you on your options. You don't get any calls. You get your quotes and see if you can qualify for something better, because this is a person that can. Unless you're really low income, she's paying way too much. $500 a month, too much. I'll tell you that much right now. That's $6,000 a year. What could you do with $6,000 a year extra that you don't pay in your health insurance? All right, let's look in the next one.
Health insurance is astronomical right now. I remember when I was working, for a corporation back in 2018, I think that I was paying for my family, a family of 5, I believe it was $300 a paycheck. And that did include like my health, health spending card, so that I could cover the cost of deductibles, because my deductible, I believe, was like $1,000 at the time.
That's a low deductible.
So fast forward to today, and my husband, the insurance is under my husband's name. So I don't know. It's really bad, guys. It feels like every year it's increasing even more. So I believe he said when he was looking at enrollment this month, it said the insurance would go up an additional $65. So I believe he's up to like $470 a paycheck, and he did not get the health spending card, guys.
Okay, so they have an employer option. They're paying about $1,000 a month. Sounds like she's not a big fan of her health insurance, but $1,000 a month. They're a household of 3 or 4. Employer options. I'm going to break this down real simply. It's good for the employee. Typically, it's going to cost you next to nothing. But when you add your family on, the employer doesn't cover any of those costs. That's typical. Not in all cases, but it's typical. So what's going on with them is they're paying close to full price. Maybe they are paying full price for their whole family. A better option? Let's talk about it. A better option for them would be to have the husband on the employer plan. He's probably going to pay $50 a pay period, get his good insurance for $100 a month, and then switch the rest of the family to their own insurance plan. And that's either going to be public marketplace, ACA, Obamacare. That's all the same thing. It's called a public market. Or it's going to be a private plan. The way that they would pick which way to go would be based on, do you have a low income, or do you have real major pre-existing? If either of those boxes are checked, you go to the public market. You're going to get a reduced rate. If neither of those boxes are checked and they're healthy and they make too much money, you go to the private market. Okay? The private market's going to give you a reduced rate because you're healthy. So if they're paying $1,000 a month for their insurance now, I'm guessing them switching would save them a minimum of $200 a month if they had split policies. Minimum. With good insurance. Okay? Let's see what else she's talking about.
I tried to talk him into it. I said, I'm telling you from experience, you need to get that card. And he was just like, they're taking so much money out of my paycheck. I can't do that. I was like, ugh. It kind of makes me want to go back to work to help him with that, because that's just ridiculous, So here it is. I need to have a CAT scan done for this pain that I have in my side. And they're like, oh yeah, you can get this CAT scan if you pay like $600 and something because you haven't met your $1,300 deductible.
So what's going on there is, because she didn't meet the deductible yet, they're basically giving them their full in-network cost. So if they're in-network, which obviously if it's $600 for a CAT scan or CT scan, I forgot what she said, that means they're in-network. Okay, they're giving them an in-network discount with their carrier, which reduces the bill down to $600. She's going to pay her $600. It's going to go towards her deductible. Once her deductible is met, she's going to get better deals. That's basically how that works.
So the deductible has gone up in 5 years with $300. This is just medical. This isn't dental. We're not talking about, your eye exams or anything like that. That's a whole different situation. There was a time when I had, what was it? HMO, dental HMO. I hate to tell you, it was a joke. That was a joke. I had to get PPO because it felt like nothing was really covered, and still, like when I take my kids to the dentist, they're always like, oh, this is wrong and this needs to be fixed. This needs to be fixed. And it's like, when I don't get that stuff fixed, let me tell you guys something. One time I gave in and got something fixed, and I cannot make this up. They put a crown on my daughter's tooth. I forgot how old she was. I want to say 6 or 7 or something like that. And I paid like $200 for this crown. Now, this is after the insurance, covered their part. Do you guys know that crown came off? Like, not even 3 months later. And I was like, oh,
So she had to get it
you think
again.
about it, it's like, her teeth aren't even, she doesn't even have adult teeth yet.
All right, so with dental and like vision, people ask me about those options all the time. I typically talk people out of spending money on it unless they need something like a crown. Okay, with dental insurance, employer options are typically the best dental insurance. They typically don't have waiting periods. Every other dental plan you're going to get will have waiting periods, and they're either going to give you a percentage based reimbursement or a flat rate copay. Depends on the dental plan. But if you're not using that, if you're not getting work done on your teeth and you want it just for your preventative care, just pay out of pocket for the preventative care and get a personal dental plan once you actually need something. And there are options out there that have no waiting periods too, by the way. All right, I'm not going to spend a lot of time on these videos here. I'm just going to get into a couple of tips for you. So insurance, it's this simple. There's 3 routes you get insurance: employer, public, or private. Okay, employer option, best option for the employee, typically expensive to add family. Public marketplace options are the best options for people that make a low income under 400% of the federal poverty limit. You're going to get a subsidy. That may be the best option. It's definitely your best option if you have major pre-existing or you have a scheduled surgery. Private insurance, that's your best option if you make too much money to get a decent subsidy, if you want a PPO that covers you nationwide, or if you want a reduced rate based on your health because you make too much money, but you're pretty healthy. It's that simple. All right, so check it out. Go to healthnerd.net. That's my website. You'll get quotes. You're not going to get calls. You're never going to put your personal info on the website. Nobody's going to call you like every other site does. It just gives you information. It'll give you more detailed information in writing than what I've given you now. And on there's an option to book a calendar call if you want a consultation. You can schedule it with me or one of my partners. We'll talk to you, let you know if we can help you. But the point is, by switching your insurance or really looking at your options and working with a health consultant, you're going to save at least 20% every month on your insurance.